Asian markets are having a pretty weak session this Monday morning. A couple concerns about the rising price of crude, inflationary pressures, and Wall Street's close on Friday, helping to damper sentiment today. The Nikkei 225 down 2.2%, the Hang Seng down 1.8%. Australia is down by just 1%. Well, Nirgunan Tiruchelvam is equities analyst at ABN AMRO Asia Securities. He joins us now on set to talk more about the market sentiment and how mid-caps, within that mid-cap space, we could find some opportunities. Thanks for joining us today, Nirgunan. Look, let me first tackle the issue of oil, okay? We've had oil prices rising for quite a while now, but it just seems that in the last week or so, a lot of sentiment has coalesced around worrying about oil prices, right? Have you seen market sentiment shift in your perspective?
I think there's a gathering concern that oil prices as well as other commodity prices are going to have an impact on the mid-cap space. So it is a legitimate concern in my view.
Yeah, we focus a lot, of course, on the big companies, but mid-caps also make up a large proportion of markets around the world. When you're looking at the mid-cap sector then, where a lot of times investors find value to do a bottom-up kind of approach, where are you finding companies or sectors that can better weather the oil storm, I should say?
Sure. The mid-cap space is a source of concern. I would focus on companies that are well-funded and have the prospect of delivering strong free cash flow yields. So those are the companies that I would prefer in the mid-cap space.
Well, aren't those the companies you would look at anyway? I mean, when you're looking at mid-caps, aren't you always looking at companies which are well-funded anyway? What makes now different?
What makes the present scenario different is that there would be great difficulty for a number of mid-cap companies to raise funding in this adverse environment. So if you have a strong balance sheet, if you have the cash on your balance sheet, you would be under a lot less pressure when you need to raise money. So cash is at a premium, cash is king, that's where you want to be.
Is this more a defensive strategy, Nirgunan, or is this also a growth strategy as well? I mean, in terms of looking for companies with growth and good balance sheets and cash flow?
Well, I think it's not much of a distinction in this environment. If you have cash on your balance sheet, if you have the prospect of raising strong free cash flow yields, then you will actually deliver on your growth proposition.
Okay. What sectors, what markets do you see most of these companies existing, or some of them existing, which have these qualities you talk about?
Well, there's one company which comes to mind. It's called Astro All-Asia Networks.
It's a Malaysian listed company.
That's right. It's the dominant pay TV operator in that country. Its balance sheet is strong. It has delivered on its capex plans. Also, because it's a pay TV operator, we expect them to deliver strong free cash flow yields. So the valuation is undemanding. I would like to recommend that stock.
Wouldn't advertising right now be an area of concern for networks and cable operators?
They make money from the subscription, not from the advertising.
Okay, just want to clear that up then.
Okay.
Now, you also have Wilmar International on your list of companies with strong cash flow. And I find that rather interesting because a lot of people are calling for a correction in palm oil stocks. They're a palm oil-related company as well. Aren't they going to be affected?
The important distinction that you must understand is that Wilmar is a palm oil processor. The palm oil producers are expected to do poorly when the palm oil price corrects. However, Wilmar, as a palm oil processor, will actually benefit from a correction in CPO prices because it makes money from refining the commodity.
Okay, Nirgunan, thank you so much for joining us today.
Thank you.
Appreciate it. Nirgunan Tiruchelvam, equities analyst at ABN AMRO Asia Securities, joining us here on set.